CNBC's Maria Bartiromo sat down with an exclusive interview with former Fed Chairman Paul Volcker earlier today, and shall we say it was an interesting interview. Maria is going to join us with the details. Maria, you set this thing up through the right channels and the right protocols. What the heck happened?
You know, Larry, all I can tell you is it was really a surprise to me. Chairman Volcker came on the show and he sat down and initially, he said, look, I don't remember agreeing to this. I'm not sure about this. And I said, oh, and we went through, that I spoke with his assistant in order to set it up. And so he said, okay, no worries, but I do have to get to a speech. And he did, because he had a speech at really 10 minutes after he sat down. I think that he made a couple of points, which were, how bad deficits are. The idea that, we are going to see a new type of job creation. Of course, he had a meeting with President Obama today, and they talked about the greening of America and how jobs would come from that and retooling of buildings in terms of infrastructure. So he got a couple of points out, but it really did lack some substance, and he rushed away after 5 or 6 minutes or so. And I certainly was disappointed. I wanted to hear so much more. But, I think that there is speculation that there's real frustration. That Chairman Volcker has his opinions about certain things. For example, really wants banks to be lending institutions and not necessarily take on the risk in terms of investment banking and other exotic businesses that so many of the large banks do undertake in. And many people feel that he's just not being heard. And he's not being listened to in the administration. So I asked him about all of that. I'll give you a sampling of some of it. Listen to part of this interview, which happened, of course, earlier on Closing Bell. Can you talk to us about the deficit? Are you worried? Should this be a near-term priority?
Everybody ought to be worried about the deficit. It's a big deficit, but the time will come to deal with it.
When?
It all depends upon the economy.
So,
I think a lot is being pinned on the economy, Larry, and a lot of people are saying, look, we need to see economic growth. But, of course, as you know better than most, this is a vicious cycle. In order to see economic growth, we need to see job creation. In order to see job creation, we need to see small business and larger businesses actually create jobs. Jobs are not going to come from government spending. And the question is also out there about what happens when the stimulus goes away in terms of that 3.5% GDP out Friday.
Though, Maria, look, there was a big story in the New York Times, I don't know, a few weeks ago. I think it was Edmund Andrews, who's a hell of a good reporter, who basically said, Paul Volcker has ideas, but the Obama cons are not really listening to him. Yes, he wants to get the deficit down. He also would like to defend the dollar, according to many Volcker intimates. He's extremely worried. Volcker was a hard dollar Fed chairman when he conquered inflation. And your point about the banks, Volcker has essentially said, listen, maybe we should look at restoring Glass-Steagall, that the risky trading operations should be removed. Now, do you think that the Obama White House has put the screws to him, telling him, don't go out there, stop these television interviews?
I don't know, Larry. It's hard for me to speculate. I mean, I know that we had an interview set up and we were expecting to talk about 15 minutes today. And unfortunately, look, he did arrive late because of traffic or whatever, but then he had to leave immediately. I did feel like there was a reluctance to say too much. I don't know, what happened at the White House today, and I don't know if, in fact, he is being silenced or just ignored. I'm just not sure what's going on. But certainly, I think people look at Volcker and say, look, you saved the economy once before. We're happy you're there. We want to know, what you think about things right now. And unfortunately, we didn't get a lot of that today.
That's exactly right. Do we have the other clip? He was very snide to my friend Maria. Let's play this other clip that we have.
No, he wasn't, Larry. I'm not insulted.
All right, hang on a second.
This is not personal.
We want to play this and listen to this for a second.
A lot of people say, thank God Volcker is where he is right now, advising the president. You saved the economy once before. We want you to save it again.
Thank God I'm sitting here with a purple dress.
Oh, heck, Maria. Thank God I'm sitting here with a purple dress. Maria Bartiromo, you are one of the classiest, one of the very best interviewers on all of television. That is my personal editorial view. He has no right to say that. He has no right. He was just looking down on you.
I don't think Yeah, no, I don't think it was malicious in any way, Larry. I just think that he was really wanting to get out of that seat, and he didn't want any more questions, to be honest.
All right, well, I think it's a nice purple suit, by the way. We got a couple other panelists.
Thank you.
Yes, it's a heck of a nice suit. Joining us now, we have John Carney. He's the managing editor at BusinessInsider.com, which runs Cluster Stock. Maria, you stay with us. Don't move away. John is also at ClusterStock.com. We have our great pal, CNBC contributor, Don Luskin of Trend Macro. All right, John Carney. You are very outspoken, unlike Paul Volcker. Why did Paul, you're running this Maria thing at the top of your website right now. Why do you reckon Paul Volcker just kind of flipped out and took a pass on this Maria Bartiromo interview?
That was the most amazing end to an interview I've ever seen on CNBC. So, Maria, you get a prize for that. I do think that that Paul Volcker probably has been told, look, you know, you've got to come a little closer to the party line here. We're going to be running big deficits as far as the eye can see. Your hawkish position isn't going with the administration. And I don't think Volcker will ever say something he doesn't believe in. So when it came down to it, he decided, I don't want to say anything else.
All right. Don Luskin, what's your take on this Volcker story? Now, let me just say, years and years ago, I worked for Mr. Volcker at the New York Fed. I think it was the third job I had. I was an executive assistant. I used to do his Conference of Presidents work. I used to help draft speeches. He is kind of a grizzly, prickly guy, but he's a man of great wisdom, and he's probably the best central banker of our lifetime. Don Luskin, what just happened here with Maria? How do you read this story?
Well, look. Obviously, Paul Volcker is Dr. Tough Love. He did what he had to do in the late 70s and the early 80s to put the screws on the economy, pay whatever price it was necessary to get double-digit inflation to go away, and he did that. But clearly, the Obama administration is not about tough love. It's about stimulus and about handouts and bailouts and regulatory forbearance. And the best Paul Volcker can do is give the Obama administration a veneer of elder statesman credibility. And probably, knowing his deep integrity, the only way he can bring himself to do that is just to kind of show up for a few minutes at a time and keep his mouth shut.
Well, maybe he shouldn't show up. You know, Maria, on top of this Volcker thing, you had Tim Geithner was on Meet the Press yesterday, and he was asked several times by Dave Gregory, what about deficit reduction? And it seems like Geithner just dodged the whole story. He said, yeah, we need deficit reduction, but that's all in the future. And Don Luskin makes an interesting point. I want to get your take on Geithner and Volcker. We need some tough love here. We need some tough fiscal measures here, particularly on the spending side, but nobody up there seems to want to do that, Maria. Now, let me ask you how you read this.
Yeah, I agree with that. I think that they are going to keep to their spending plans. Now, they continue to talk about getting revenue via tax increases, particularly on those making above $250,000 a year. But, you know, I found it interesting the way Geithner answered David Gregory yesterday when that subject came up, because he said, look, it's going to be hard. We're going to try, but it's going to be hard. In other words, it's not off the table that it's not going to only be the $250,000 earners who are going to see higher taxes. Taxes are going higher across the board. Now, the question is, will they back away from allowing the Bush tax cuts to expire? This is a critical issue here, and a lot of people are talking about it. I spoke to somebody today who said to me, you know, I can't imagine that they're going to allow it to expire at the end of next year. It's just going to, you know, stop any economic recovery, and it's also going to make things very tough for the next election. So we'll see about that. But I think this whole issue of taxation is something that people are not necessarily reading right, because the numbers don't add up. You're not going to get the revenue that you need in order to truly put a dent in the deficit by only focusing on higher taxes for the highest earners.
I agree with that. Let's go on a couple of other related topics, okay? First of all, John Carney, you're writing today on Cluster Stock that some big-time bankers, all right, John Mack of Morgan Stanley, Lloyd Blankfein of Goldman Sachs, Jamie Dimon of J.P. Morgan, they showed up at the New York Fed. You're writing about that. Was this meeting only about compensation in your judgment? I mean, those are heavy hitters. How do you read that?
It's hard for me to believe that they would actually pull these three guys into a meeting all together and just talk about compensation. If that is all they talked about, that was a gigantic waste of time and energy. And, I mean, I'll tell you what, it made us all jump out of our seats at the Business Insider. Seeing those guys walk into the Fed, It brought back a lot of unpleasant memories from last year.
All right, and another thing, it did have a familiar ring to it, which you all are reporting on. You said one reason the stock market sold off this afternoon, it still finished positive, but it was off its highs, is that this Federal Reserve Board guy, the associate